Good morning and welcome to the Leadership and Insurance podcast. I'm your host, Alex Bond, and I'm really lucky today to be joined by Rob Galbraith, who unusually we're normally introducing to say like they run XYZ business man of many hats, which we're always talking about in insurtech land, but particularly author, futurist, speaker, thought person on insurtech. Rob, I don't know if that's accurately covering you off, but I'd let you kind of how would you describe yourself and what the work that you do?
Sure, Alex. It's great to be on with you. And I think you spot on. I am in the process of setting up my own business, but haven't quite pulled the trigger yet because it'd be much easier to just say, I'm head of whatever at this firm and here's what we do. So I get to do a lot of the hand waving without that. But absolutely, we're coming on the 3-year anniversary of the publication of my book, The End of Insurance as We Know It. And I'm still finding folks out there that said, "Oh, you're an author. When is your book coming out?" And it's like, it's been out. It's done quite well or whatever. Definitely hope to write a second book, but don't have any firm dates that I'm ready to commit to yet. So we're kind of at that time where our days are fast and our years are slow, or vice versa, I guess, with the pandemic. So I'm very much in that time vortex. So yes, but the man of many hats is a great way to put it.
Absolutely. But to give us some context, because I think that's, we've had lots of plucky upstarts coming into the insurance landscape saying insurance is broken and I'm going to revolutionize it. That's not you. There's a very good pedigree in insurance. So perhaps you kind of walk us through, particularly your career at USAA and what you were doing there.
Yeah, happy to. So you're absolutely right. I really kind of come from an insurance background. Actually, started my degree at university in economics, had the opportunity to work for the Federal Reserve Board, the central bank here in the United States, where I'm based, for the first 2.5 years of my career. Moved down to San Antonio, Texas, whereas I still reside, and was able to fortunately catch on with USAA after a short stint at Citibank, and worked at USAA for almost 20 years in a variety of different roles. And that really kind of led to the ability to innovate. USAA insures military members and their families, and they do business directly. They don't have agents, either exclusive agents or independent agents or brokers that they sell through. And so just give you kind of a picture that I think really neatly sums up, their push for innovation. So after 9/11, when the Iraq War started, the Afghanistan War, and then the war in Iraq started, mobile phones, right, became a big thing kind of at the end of the 2000s. And so asking questions about, could we have a mobile app? Could you have somebody that's deployed in Afghanistan at 2 a.m. on one bar that's trying to conduct business, right? And how can we serve their needs? And, that's a very demanding environment. But if we can serve the needs of that individual, then, the general public, whether they be an active duty military, somebody that's previously served, the son or daughter, or, a grandchild of somebody that served, we can probably meet their needs in just, the shopping mall or whatnot, right, on a Friday afternoon in a busy time, or the Wi-Fi is crowded. So, that kind of mentality just led to a lot of questioning about the business models and how can we do things better. And so I think that kind of infiltrated throughout a lot of my thinking, and had the opportunity to explore a lot of emerging technologies, partner with a lot of startups. And that led to me writing my book, which came out at the beginning of 2019, called The End of Insurance as We Know It. Had just an amazing reception for that book worldwide since that time. I spent 2.5 years after leaving USA as innovation lead at a company called AF Group that sells commercial lines insurance rather than personal lines at USA, working through independent agents. And so got exposed to that channel and just how important distribution is in the marketplace, and some of the challenges of going direct versus going through the agent channel. And obviously a lot of startups have I think originally said, these are middlemen and we're going to eliminate that and kind of reduce costs. And they realized that customer acquisition costs are quite challenging, and have pivoted to either, do both or go exclusively through agents or focus on improving the agent experience rather than directly through customers. So I've been on my own since August of last year, and just, enjoying after 25 years of working at large institutions, kind of being a startup myself and advising a lot of companies, consulting, and as you mentioned, giving a lot of talks and workshops for different corporate clients.
Awesome, thank you for that. It's something I was thinking about when you talk about USAA, which I don't know why it's taken me so long to kind of think of this, is that, a lot of the technological developments that we see in the kind of consumer landscape come from military development and military application, because you're saying, right, this is the extreme end of what we have to cope with, whether it be car safety or aviation. And I hadn't thought to bring it down to the humble insurance. Like if we can kind of build some technology that works for a person on one bar in the back end of nowhere, then we can probably do it for the mum in the shopping mall. And but that I think that's an interesting way to look at innovation, saying what's the most extreme end of this, and then how do we bring this into kind of day-to-day parlance. I don't think I've set anyone a loftier first question than this. So I sort of thank you for being a good sport, and it's really sort of, I love the fact that you've got this breadth of background and you've looked at different parts of the value chain and different distribution models. And we were always talking on this podcast about the challenge of having enough breadth of experience to sort of have value for multiple insurtechs. So, loftiest question I can probably ask is 2022. What does insurance look like in 2030 for you?
Yeah, I think a lot of folks such as myself that have long careers in the insurance profession really have the wrong attitude towards insurtech, and they rightly point out that technology has been part of the insurance industry for a long time. There's a misnomer out there that insurance entities are slow to adopt technology, where actually the converse is true. They were early adopters. They were just early adopters in the 1970s and the 1980s when we had mainframe computing and then desktop computing following that. And so, maintaining those systems, keeping the trains running while then incorporating a lot of these new emerging technologies is exceedingly challenging. And a lot of these companies have built up significant technical debt. In the 2010s, of course, was a lot of buzz about digital transformation journeys. And it's a big change to go from a proprietary system that's on premises to something that's perhaps based in the cloud in a more kind of platform ecosystem approach. The idea that, you actually want your system to be able to plug and play with many other systems, some of which you may own, but many of which you don't directly own. And that you even want to be open to partner with that startup that doesn't exist yet, but 2 years from now will be a key strategic partner of yours to offer some, new product or service to your clients. So insurtech is not a fad, and I know there's been a lot of written, particularly early this year, as some of the early IPOs have now fizzled out, and the market returns. This week we get news that Root is having to lay off 300 individuals, and the Lemonade share price has fallen below its IPO price. So I think we're at a little bit of a nadir in terms of just, hey, are we losing momentum on the insurtech space? I actually feel like we're still very much in the early days. And so to your question about the 2030s, much of what I've seen is really improving on the same model that we've had for a really long time in insurance. And so maybe you're out marketing somebody, you've got some, quick twist of use of AI or something, but fundamentally it's very much the same. And I see a lot of opportunity for just fundamentally rethinking insurance. I talk about the S.C.A.L.E.D Technologies, S.C.A.L.E.D being an acronym. And so that's sensors, cloud computing, artificial intelligence, localized knowledge. Think about GPS, aerial imagery, things like that. Efficiencies in the back office, so efficient technologies, RPAs, OCR, natural language processing, low code, no code solutions, and then digital distribution and communication, right? That ability to transact business online, or at least communicate with clients online, that important part. And again, we're still very much in the early days of kind of incorporating those technologies, both traditional incumbents and startups, to the point where you're really coming up with a compelling value proposition to customers. And in many cases, it is starting in the personal line space and small commercial space. And what I'm seeing, particularly in a lot of developing economies, is the ability to offer insurance products to people that have never had insurance before. So I think about microinsurance. I think about crop insurance type projects, parametric cover, things like being able to insure the Amazon package getting stolen off your porch, right? Travel insurance, embedded has been a big thing, and so I think what you're going to see is really two things in the 2030s. One, a whole new just suite and class of insurance products that don't exist today or are just starting to come out today, where we're going to be buying insurance for a whole lot more things. And we may not even know who we're buying it from, right? It may be through a retailer or somebody else. But I think we're going to want that type of protection on all manner of different things, and bringing down the cost curve, the expense ratio, allows you to open up to a lot of new marketplaces. The second thing I think is going to be competing on both algorithms and experiences, right? So if you have the best data and the best algorithms, you're going to outcompete from a pricing, underwriting standpoint. But of course, if you don't have that compelling experience part, you're going to really struggle to attract customers. And so I think about things like telematics. I think about things like smart home devices, wearables, you name it. These sensors are able to stream data where we can kind of directly observe behavior of systems, right? We don't have to ask, right? What make and model is your car? We don't have to ask how old your home is, what's the size of your flat, things like that. And we really, there are people that are collecting that data and they've really looked at it, but we really haven't made this full paradigm shift to doing business that way. And that eliminates a lot of the subjective questions that we have to ask, agents to collect or ask of clients, a lot of the manual checkpoints that you have to do in an underwriting or claims process. And so I just think we're going to see a fundamental rethink of insurance. And I think we're going to see some of the traditional insurers, continue to be leaders in the space in 2030s, but I think we're going to see a host of new names as well. And that's different for our sector because traditionally, right, the top companies have been the top companies for decades, if not for centuries. Many of them have a very long and rich history. We're not used to that dynamicism that you might see in retail or entertainment or other sectors. And so I think that's going to be a big change that we'll see in the 2030s. There's going to be a lot of new names out there that don't exist or are very minor today that I think are going to be household names globally in the 2030s.
Thank you. I set you a lofty question, and you answered very very fully, which I like. Something I couldn't help thinking about whilst you were talking was about the. I think when we talk about disruption, when we talk about innovation, I keep thinking come back to the customer, because almost every podcast guest that I have that sells an insurtech product or insurtech solution is talking about customer and focusing on that. And I just take it back to it. We take insurance back to first principles, and not even first principles, just talking back to the sort of rudimentary concept of sitting at Lloyd's Coffee House and there's a ship going out and we're all putting our name under it. If it goes down, we'll cover you for the cost of it. Very simplistic, very transactional. There's a thing that we're insuring that if lost, we're going to repay for and to put good. And I think about the kind of evolution of insurtech as we look at it. Is it more reflective of the sort of demands of society, that our demands are so nuanced now? Because let's be honest, most sort of particularly sort of richer civilizations, that if we lose a laptop, it's an inconvenience. It's an inconvenience. It's like, yes, I'd like to return the money for my laptop, but it's more of an inconvenience. So we're getting into these nuanced insurances, like the Amazon package getting stolen off my porch. But that's because we live in a world where it's perfectly normal for me to get something delivered in 24 hours and it just sits on my porch, rather than it being actually evolution of insurance and insurance being broken. It's more of an evolution of society, and therefore what we expect from an insurance product. I've taken a very long time to ask a question.
No,
but I don't know if that came across at all.
100%. Yeah, no, you're 100%. And in my book, I talk about what I call the 7 fatal flaws of insurance. And without going into too much detail, that is essentially that insurance is too expensive, meaning it's a large percentage of a household's budget or a business's budget. It's too complicated. So you might think about your utility bill, and while it may be expensive to pay your electricity or your water, right, the use cases and the benefits that you derive are fairly obvious. So you don't mind paying that. If you're again, right, leasing an apartment, or you're a car, right, you're making a car payment. These things are lots of money, but very compelling. The same isn't true of insurance, right? It's like I'm paying hundreds of dollars, thousands of dollars a month for something I hope I don't use, right? And then when I go to use it, of course, most people kind of default to the idea of a bank account of, oh, you've been saving my premiums on the side, to be this pot of money for me when I need to use it. And the idea that actually, no, your premiums are going to pay losses that other people had, right, in this year. And at the end of the year, right, there's no pot of money for you, right? And if you have a loss, then that's going to come from other people. I think people still really struggle, and they don't understand certainly deductibles, right? Sub limits, co-insurance, the whole 9 yards. That most of us that have been in the industry for a long time can certainly rip off and recite, and are very kind of proud of our knowledge, but that's not the way most people's mental model of insurance works. So when they interact with the product, they have that claim or whatever, they get very confused. And again, that's where the agents or brokers really play a valuable role in terms of educating folks on something that they don't know much about and probably don't care to know much about. It's certainly easy to game the system, right? So fraud and then fraud prevention, both of those jack up the overall cost of insurance. It's a cash drain. So in addition to being expensive, the liquidity, right? You mentioned losing your laptop, or if your laptop's damaged. If you think about using a credit card to pay for that, it's like I only have to incur the expense when the damage actually occurs, and then I have a lot of flexibility on paying it off. I could pay it off immediately right away, or I could pay a minimum balance over a period of time, or perhaps I pay a set amount until I get some bonus or some extra money, and then I pay the whole thing off. So you have a lot of flexibility as somebody that's incurred that loss in terms of how you how you cover that with insurance, right? You've got to pay the premiums up front in almost every case. And so losing the use of that money, that the insurance company is going to invest that money, right, and that helps bring premiums down, but they're recouping the benefit of having that cash and being able to invest it. This is how Warren Buffett has really made a living. It doesn't cover all causes of loss. It doesn't cover everything that you would want to insure, and it doesn't cover every one that we would want to insure. And so to the extent that we have people that are uncovered for things like flood and other things, a lot of the burden falls upon the government. So it might be disaster assistance, or maybe some type of social safety net programs. And as most of the developed countries really start to age, start to have more retirees, the ratio of workers to retirees is going to become smaller and smaller. I do think that governments are going to be under pressure to limit the amount of spending and look for ways to kind of offload this. And if they can partner by working with private insurance entities that are willing to take on these risks that may be insurable but are not offered today in a particular country just because the government's providing that, I think you're going to see kind of a growing size of the marketplace from that as well.
Yeah. And we always see that, don't we? So the more developing or richer civilization, we see more insurances, and excuse me, becomes more nuanced. And I think that's the thing. I think we become isolated from like the true purposes of insurance, which is to basically ensure the level playing field of like society. I really believe in that. I really believe insurance as a social good, and because I always bring it back to kind of that familial situation. If you had a family or a village, and you look at the world like that, then if we all covered each other's kind of individual losses, we'd all be in the same place. But I'm a hipster that lives in Brighton, so we're kind of that always comes out of me. I wanted to ask you. We touched on it. You touched on it there earlier. Talking point was what's happened at Root recently, and we've seen the kind of drop in we've seen the fall in the value of the really prominent neo insurers. The Lemonades and the Roots. I wanted to ask you what you think that means in reflection of the pricing of the incumbents, because to a certain extent, the incumbents have had a bit of a kind of PR kicking for the last few years. But surely they're feeling slightly smug right now, I would imagine, though. They're probably sort of feeling. Do you think they're underpriced, or was it were we victims of the hype machine, do you think, when it came to pricing those kind of emergent neo insurers?
Yeah, I think part of it is simply not having a lot of experience, right? So this idea of new insurers, right? The neo insurance companies. I mean, like I mentioned before, a lot of traditional incumbents have been around for decades, so you really haven't had a new listing for a long time. Maybe there's some type of demutualization or things like that. And so I don't feel like a lot of the incumbents are undervalued. I think insurance is a difficult sector relative to many other sectors in terms of an investor, because you have this high capital requirement and low margins. And so it's just not an attractive profile for a business for many investors, just depending on their time horizon. So I think seeing a lot of the insurtechs and neo insurers kind of, I guess, have a little bit of gravity, right, coming back to earth makes a lot of sense to me, particularly because in many cases, I don't see them as being fundamentally different than the traditional incumbents they're competing against. And so that's the part about insurtech that I still kind of wait on. And I think we absolutely will see in the 2030s is that totally new, totally revolutionary. Fundamentally, a lot of these people are using the same contract forms. They're using a lot of the same, pricing processes. There's often a twist. There's a marketing component. Some of that is hype. Some of that I think is absolutely real, right? There may be a lower expense ratio, for instance, if they're using a better use of technology. But I think that, as I mentioned, I haven't seen just something that's just totally new, totally different. And particularly I think about moats, right? So what is a competitive advantage for a business? If you're using a brand new source of data that nobody else has, it gives you better insight and risk. Or if you've got better algorithms that can make better sense of a lot of this data. And, is that a lasting competitive advantage, right? A big moat, or is that just a temporary advantage that you might have? And so particularly we talked about the digital transformation journeys, and I look at companies like Guidewire and Duck Creek that not only are more and more companies going to those platforms, but because they are now having partner networks, they're able to integrate a lot of the insurtech startups, particularly those that are more technology focused rather than looking to compete. They're looking to enable incumbents. That actually simplifies a lot of the partnerships, a lot of the opportunities if you can do it through a core systems platform. So I'm sure there'll be kind of a back and forth over time. But what I'm kind of looking for, and I believe is out there, but I haven't really seen it yet, is a company that has carved out a true niche, right, that is different than everyone else, that's going to give them a lasting competitive advantage over time.
Yeah, I think there's a couple of things that came to mind when we were talking about that. Is that one, I always want to be really clear that I've no agenda against the neo insurers, and I'm sure I speak for you that you haven't either. But it's more the hype machine and more reflective of how we price such things in society, rather than them overhyping it, because the disparity between the way they were being priced versus the incumbent class, for me, was the massive warning sign. It wasn't a reflection of the business model, because what I saw was a modern take on a traditional insurance play. So better distribution, probably a better customer experience. And Jeff Keast was on from Montu, was on a podcast, and he talked about how banks have for a long time done a very good job of getting you, when you go to college, to get your first bank account, and then staying with you because they were giving you free bank accounts because they saw you as a lifetime customer. And I think what particularly Lemonade did, I thought that was incredibly smart, is that get you as a renter because you're going to be probably younger in age, and then try and be basically your insurer for that life journey. So the long-term value of the Lemonade model and the long-term value of a Lemonade customer should ultimately be higher. But we were trying to that's a long-term solution, and unfortunately the way that we value the stock market is in the short term, and I think that's where it was at odds. So I think this is kind of a sort of naturalization of the market, and no reflection on those businesses, because it was for me, they were really interested in nuances, and I think long term they'll be incredibly successful in maybe retaining customers if they have that attitude of going, right, once we get you, it's all about losing you. Whereas insurance has become, particularly on a personal lines basis, it's so price sensitive. It's so much about kind of transactional relationships. But the big shift is like, can you get enough touch points with your customer to keep loyalty? And that's where I think there's an interesting thing to play out, but we'll only see that by 2030. So we'll have to do this in 8 years and find out, Rob, and see if we're there. I think leading on from that, and I think we were just about to get onto that, was that, you know, do you think well, I think we both acknowledged it haven't. You know, why haven't we seen enough big leaps? You know, but we haven't seen those big leaps. We've seen nuances in distribution. We've seen nuances of that. You know, are we actually? Do you think we're actually seeing any true innovation, or are we just seeing, you know, variations on a theme at this point in time?
I definitely think there's true innovation. And again, I think it's, you know, a bit early days, right, where it hasn't kind of fully taken hold. So, you know, there's some amazing technologies out there, in all manner. So I feel like I'm going to, you know, leave somebody out. But for instance, I think about the ability to review documents, right? And you know, medical bills, doctor's notes, things like that. There's a lot of back office processes that, quite frankly, require a lot of manual touch points. And I think the pandemic has actually kind of shined light on this. So anybody that had kind of a mail operation that everyone moved work from home, it's like, well, you know, how are we supposed to get the mail? How are we supposed to answer it? How are we supposed to process this? And you know, if your job is to type information from screen 1 into screen 2, and these systems clearly don't talk to each other, right? Or you're on the phone having to check with somebody all day. There's a lot of that, a lot of manual touch points and a lot of our workflows. And so I think a lot of the insurtechs have tried to understand the idea of workflows, right? And the idea of trying to integrate in with a system. And, you know, they may have a more compelling piece, but that's only one of 10 steps, right? In the workflow. And so, hey, if you don't do all 10, or if you don't integrate well with the systems that do the other 9, or things like that, right? These become challenge. So yes, on a strictly ROI for a particular step, right, that can be a challenge. So I just think, you know, the SaaS model, software as a solution, subscriptions, it's giving, you know, access to enterprise level software that only the largest companies could have to a whole bunch more players now. And I think, again, through, you know, whether it be, you know, open insurance initiatives that we have in a lot of countries, just that idea of kind of moving to APIs. We're in kind of these early days, but you're going to see a lot more interoperability. You're going to see the ability to, you know, adapt to a new solution relatively quickly. And so things like, you know, billing reviews, things that are kind of manual touches today, I think you're going to see a lot of expense benefits. And for those companies that don't adopt, right, they're all of a sudden going to start kind of losing out because their expense ratios are going to become uncompetitive. So I don't know that those things are lasting competitive advantage, but I do think that they're going to move the industry to hopefully what is lower and lower expense ratios over time, which again is better for consumers, of course, and opens up a new range of products that you know, otherwise, right, might not have been possible because expense ratios were too high. You mentioned Lemonade kind of starting with the renters, right? That's exactly why they started of, hey, here's an underserved segment of business that we think we can quickly gain market share and become a top 10 writer in for that particular line, and then obviously expand out from there as we get known and as our customers you know, age and mature and have needs for other products. And so I think you're going to see a lot more of that. The other thing I'll mention, Alex, is we're talking about competitive advantage, and I think about a company like Apple, right? That they've done 2 things really well that I think is instructive for folks in the insurance industry. One is that ability to kind of turn over what their lead product is. So starting kind of with Macintosh, right? Going to an iPod, then you've got, right, the you know, iPhone. I've listened to you on, you know, AirPods now and all that. And so, you know, you can see that their sell of desktop Max isn't nearly what it was
Mm,
probably 34 years ago, but they've
mhm,
continued to reinvent themselves, right? From a product standpoint, they've kept their products fresh, they've kept their products relevant. They talk about a beautifully simple design as kind of a theme throughout, and so they've been able to maintain that even from Steve Jobs to Tim Cook. So I just love the fact that if you look at the product mix, right, of what they've been able to sell, and iPhone obviously continues to still be the top one, over a decade later, but that's how they've become the largest company in the world. The other thing that they've done is they've become a lifestyle brand.
mhm,
So I don't think about Apple as a technology company, right? Yes, that's actually what business they're in and that's what they sell. But they're more than that. I don't think of them as a competitor to a Microsoft or Lenovo or others, right? Or Samsung. I think of them kind of in their own class of business.
mm,
Whereas I don't think about that for all those other names that I mentioned. I see them as kind of interchangeable. And so I think that's where the insurance industry has really struggled, is what's difference between these companies? Is there a meaningful difference? Or to your point, do I just kind of, go on the aggregator and see who's cheapest this renewal? And so I think that companies that are able to do that, and that might be through not just offering insurance, but having insurance as a feature, right, as one aspect of a more compelling value proposition. And that might be around digital health initiatives, that might be around smart home. I don't know exactly what it's going to be, right, but I
mm.
think when we kind of extend to be a more relevant offering that's more of a lifestyle where you're embedded in my everyday life, and I think about you as a separate class from just an insurance company, I think there's a lot of ability to carve out kind of a bit of a fortress there competitively for anyone that's able to make that happen.
Mm, yeah, I mean, as you were saying that, I was like, one, I was two things. My raging hatred for anything Apple when it comes to my business, because I just have palpitations about. I had a guy that bought his laptop and he had three of his cables went in about the same month, and every time I went to buy one, I was like, "How much are they?" He was like, "Oh, like £40." I was like, "It's like £3 for my non Apple product." So like, I ran out of patience with it very quickly. It was cheaper to buy my laptop, but no, I think you're absolutely right. Is that brand piece is so powerful, and I do think that in a complimentary way about what Lemonade did. I think that they've sort of made it cool to like an insurance company because of their message and some of the kind of not-for-profit elements of what they've been doing. But secondly, I think that's why embedded for me is so important and compelling as a proposition, because it's we talk about hyper personalization of insurance and the insured. Surely we get to a point where, I've got my smartwatch on, I wear it to the gym, I wear it when I run, I wear it when I work. When I get home, my phone's on me anyway. So my phone and my watch can tell you whether I'm driving or flying or sitting down or at work. And almost surely we get to a point where I pay a variable insurance cost for at the end of the month, or that covers off what I did, what I actually did, rather than what I should be doing. And it's an all-in-one solution. And I that for me feels like the sort of almost the end point of what insurance should be, because I only want to pay for the things that I've used. I think that's what everyone gets frustrated about. We're seeing that in small stages, aren't we, where your insurance turns off because you're home, so you're not likely to get burgled, or at least goes down. And you don't pay to you didn't pay to insure your car from a liability standpoint because it was sat on your driveway because we weren't allowed to drive anywhere during the pandemic. And I think we're seeing those kind of steps in that direction, but that for me seems like the ultimate goal that we're driving towards. What that means from a company perspective is quite interesting. But even I think the evolution of things that we're seeing in the vertical stack. If you've got a vertical stack for running a recruitment company like mine, you can see everything. So I'm going to be able to get that insurance, which is just relevant for me and my business. But like we've done a lot of polite bashing, but we've pointed out some of the flaws. But I wanted to talk about what's interesting you right now, what's impressing you that you're seeing out there, because there's so much creativity and innovation happening. Any particular technologies, or maybe even individuals, companies that you've got your eye on, you think are genuinely doing something different?
Yeah, I think a couple areas, and I won't name any specific companies, but first of all, there is so much innovation going on in areas such as Latin America and
Hmm.
Africa and parts of Asia that these have historically been kind of underserved by the larger companies. I think there's more penetration, right, in North America and Europe. And a lot of the offerings in those areas tend to be that office, right, of a larger company that might be based
Mm.
in Europe or is not in that area. And so I'm seeing a ton of innovation from people that are in those markets, that know the challenge in those markets. For instance, I was talking with a gentleman that recently set up a business in Mexico, and he wants to emulate what they've done at Next Insurance and sell small commercial business to Mexico. And I'm going to, apologize, I want to, mess up the exact statistics, but it was something like, 92% or thereabouts of small businesses in Mexico don't have any insurance coverage. They don't have
Wow.
that kind of protection. And so
Hmm.
to your point earlier, Alex, about, families, folks saving away right under the mattress or that rainy day fund. And so this is very, very common in many of these countries. And I think both there's a social element, right, to being able to provide insurance products, but then also there's a societal benefit in terms of that frees up if that insurance product actually takes hold and gains the trust of consumers to where they really believe in it and they trust it and they don't need to save as much, then they're able to spend that, right? And that might be
Mm.
consumption or that might be investment in their own business or whatnot. And so that's going to actually fuel economic growth in those areas. There's another, the startup in Africa, and I'm forgetting the specifics, but I know that they were actually accepting recyclables for premium payments, right, as a
Wow.
way to kind of offset. So there's just some,
Mm.
true innovation out there, and I think that because these countries have been underserved by the existing markets, they're not necessarily tied to old systems or old paradigms or old ways of doing things. And so they can be creative. They can come up with things that are applicable for the market. And then I actually see kind of this reverse innovation cycle where traditionally, right, it's happened in places such as Silicon Valley, right, and then kind of going out to the rest of the world.
Hmm.
London, certainly, right, the center for financial innovation and kind of spreads out. I actually think some of those are going to come to our area. So businesses that are, entirely done by mobile phone, and in many cases, in these countries, right, the mobile phone provider has partnered with that insurance company in terms of a low cost distribution method. And so I think as we see successes in some of those areas, those will actually be kind of exported to the more richly penetrated areas that today are well served. Doesn't mean it couldn't be better, but maybe don't have that so-called burning platform to
Mm.
innovate for insurance products as there are in many other areas that are not adequately served by the industry today.
Mm. I love that idea. I didn't know about that. I'd like taking recyclables to pay for your insurance premium. What a great double incentive that is. Free insurance and more cycling. That definitely speaks to my value, Jane. Off air, I'll have to find out what company that is. I'm really intrigued. They need to be a guest. That might be the next guest. But um, final question. Really conscious of your time, and thank you for being so generous. I kind of wanted to know, and this is a bit of a fun question, really more than anything, like where you think we are on this like insurance evolutionary time frame. Are we standing upright yet? Are we still on all fours? Are we on our heels yet? Where do you think we are on the sort of evolution?
Yeah, great question. I think we're still on all fours and we're crawling around some, and we might be lifting up on the coffee table a bit to look around, but I think it's still, very much early on. And again, one of the things that I talk to companies about, you kind of mentioned this insurance futurist, and we talk about the 2030s is um, I try to get companies to think beyond. Often their strategic horizon, quite frankly, is just 3 to 5 years, right? And
Yeah,
it's usually more on the short end than the long end. And I get it. Everyone has goals
yeah.
for a year. Oftentimes bonuses and other incentives are tied to meeting those goals, but those can be counterproductive for looking, at 10 years in advance. And so I certainly don't pretend to have all the answers, but when I talk to companies, I try to bucket things into 4 different categories. What are the economic and financial trends that are you observe today, and how do you think they're going to play out, or could play out 10 years from now? What are some of those demographic and societal changes? What are some of the things in terms of politics or evolving risks? Right, certainly a pandemic probably wasn't at the top of mind at the beginning of 2020, but right now we'll certainly be mindful. And then finally, the technology piece. And I see a lot of companies really start with the technology piece, right? But I actually ask them to focus on those technological trends last, because obviously there's this interesting interplay between technology and society and countries and behaviors, and then vice versa, right? There's kind of a feedback loop of, we think about people and shaping technology, but then what we've learned through social media and many other ways, right, that the technology actually shapes people and behaviors and can kind of change our course. So thinking about those kind of dynamics. And then I ask companies, okay, now that you've painted a picture of what you think this future could look like what are some of the key assumptions that are underpinning that, and how do you think it's going to develop out? And so build your plan around where you think the industry is going to be 10, 15 years from now. What investments do you need to be making now, so you're not in that hole of technical debt, or you're not falling yourself behind? But then really hold yourself accountable to revisiting those assumptions every 6 months. We know something's going to change. I mean, the only constant is change. That's the one thing that we can say. And so agility and flexibility, building that into your enterprise is so key. And that's not easily done for traditional incumbents. And I've even talked to insurtech startups that are talking about entirely replacing their tech stack after 3 years, right? Which just is, you can't believe it as somebody that's come from that traditional incumbent world where you're still running mainframes in the 1970s and trying to get off of the green screens, right? But it is so imperative. And so I very much think that there's a lot of technologies that hold promise today that are just scratching the surface, just being explored, that will be mainstream in the 2030s. And so which are those? Which are fads versus which are going to have lasting power? That's really the challenge for C-suite to try to anticipate and figure out, and having kind of robust conversations. This is where diversity and inclusion, quite frankly, is quite important, right? We value it for its own social good. It feels like the right thing to do, but it's also has a business benefit of getting people from different backgrounds, from different viewpoints, to talk about these things. One final thought is this whole myth of experience that is out there. Traditionally, it's been a very apprenticeship type model in the industry, right? Where you work as an underwriter or as a claims adjuster, and maybe after 5 years, you make it to senior, and after 10 years, you make it into management. If everything goes well, maybe you're an executive in 20 years, if all things work out. There's still elements of insurance that is absolutely true and still holds, but there's also elements where millennials and now Gen Z entering the workforce, they have a different experience with technology because they've been immersed with it from the ground up. And I see it in my 3 kids. And so they're going to have very different thoughts about how new technologies could be incorporated in insurance that are equally as valid as those, such as myself, that have been in the industry for over 2 decades. And so, finding that right balance, having that difference of opinion, making sure that you're really getting everybody's wisdom, and that could be the wisdom of the 19-year-old intern even, as part of your discussions about, where your company should head and how you should proceed, I think is critically important.
Yeah, I think that's so crucial. I think diversity and inclusion, something that we're clearly trying to sort of support through the work that we do, and whether that be from the recruitment work we do and the way that we approach recruitment and proactive recruitment and blind CV submission and all that good stuff, and through to our flight series, the female leaders in insurance technology series. It's about having those different ideas in the room, and I think you look at insurance, and it's been very easy to throw stones at, but the reason that we launched our flight series was that you look at insurtech, and there's some very similar looking people, that are more likely to raise money and are more likely to sort of innovate, and that's not discrediting anyone involved, but I just, it's Friday afternoon here, but we went out for lunch as a team today, and the 2 women that work for me are both 22. Their take on technology, we were talking about social media, and just even the different interactions, their view of it is completely different from mine, and because I came into this sort of social media world I'm 40, at the age of sort of 24, 25, they've grown up with it their whole life, and so their interaction is different, their expectations are different, and therefore you've got this kind of very different consumer kind of viewpoint on it, and what they want from it, and clearly that impacts into how our expectations of insurance, our expectations of these businesses. And I'm always impressed with businesses from a recruitment standpoint when they're brave, and when they make brave decisions on hiring someone that maybe doesn't have the sort of direct application of experience, but we know is talented and we think they can do it. And I think certainly, and I'm over sort of laboring the point slightly, but one of my concerns always with big insurance businesses is they generally are large and they generally are shareholder led. And as a result, the incentives for the leadership to change when they get 4% growth year on year, it's very difficult to justify change. You're successful, you're hitting your numbers. Why rock the boat? And it's going to take people to be brave. And I suppose that for me is the importance of venture capital. For me is the importance of startups is there's an opportunity to be brave, but as you said, on some of those in their 3-year journey, already throwing out their tech stack. Once you start to become part of the establishment, you become bigger, you become part of the kind of makeup of the insurance industry, you risk being in the position of not being able to innovate yourself. So it's a real complicated situation, and that's another hour-long podcast. So I won't go any further with that one. But Rob, it's been a genuine pleasure. I've really been looking forward to this. Thank you so much for being a guest. And my last slightly cheeky question, because we started beforehand: how long till we see you at the helm of your own innovative new thing? Is that something for 2022? Do we think, or should we keep posted on that?
Yeah, absolutely. That's the goal this year. And you and I were talking, we're recording this at the very tail end of January, and I've yet to make my New Year's resolution, so I know that's on the list, but I haven't sat down and formalized it. And I've been very fortunate to speak to folks all over the world on this. As I mentioned, coming up with the 3-year anniversary of the publication of The End of Insurance as We Know It, and I know how much that has really resonated. So whether that's another book, whether that's a newsletter of some type, whether that's my own podcast, which I am the co-host of a podcast called the InsurTech Geek Podcast, I have folks encourage them to check out and to subscribe to, whether that's a video series or whatnot. So I think there's a ton of interesting things going on in the insurance and InsurTech world. So hoping to kind of develop into a content creation model that's out there. So more to come on that once that's formalized. Awesome.
Rob, thank you very much for your time. Really appreciate it. Thanks for being a guest on the Leadership Insurance Podcast.
Pleasure to be with you, Alex. Enjoyed the conversation.
Cheers.
Thank you so much. Cheers.
Bye.